most catchy songs in the world are written off 4 chords. I found my 4 chords in trading. It's price action, 2 moving averages, and a MACD. And then I become really damn good at that. I've been at least 15, 16 years full-time making my money from the market. Don't try and get the results that good traders get. Do what good traders do and the results will come. Without price, there are no moving averages. So price is the single most important thing. I've never seen anything more positive for any asset class ever than what I've been watching with Bitcoin for the last 18 months.
All right, welcome to the weekly trading battle. I'm your host, Steve Ruffley. Today we have Craig Cobb. He has spent 20 years mastering the markets and teaching thousands of traders around the world. Known for his clear, non-nonsense approach, he makes it easy for traders to navigate the markets and trade with crypto with confidence. Trusted by thousands of traders globally, he's very straightforward. We're getting that no-fluff teaching style, and he does this all through his Grow Me Co. company. Craig, welcome to the trading battle. How you doing?
Good, mate. Thanks for having me. I appreciate your time, and it'd be good to have a chat.
Yeah, no problem. Well, I'm going to start the same way as I always do. As traders always have a story of how we got started. What's your story, mate? How'd you get going?
I'll break it down. I was a young man. I had lots of good mentors. My dad used to build houses for the very wealthy here in Australia, and I used to get mentored by them. And I'd always the biggest problem that they would all have was they would say the biggest problem in business, because they got 2,000 staff or something. They'd say the biggest problem with business is people, is managing people. And I'm like, well, how do you make money without having to manage people? Because it sounded like a pain. Like the issues they had sounded really, really hard, And I said, well, if I had my time again, I'd be an investor. And I'm like, okay, what's that? So I started getting the twig that, okay, I can make a lot of money without having a lot of staff. If staff are the issues, then how do I make money without having the major issue that everybody has in growing to a successful size business, right? So I started looking into investing. I started investing at 16 because I had a little business when I was quite young.
Mm-hmm.
I lost all my money in my first ever trade. I put $3,000 into a company called Phoenix Technologies Limited. It rocketed. Like I was up. My 3,000 was worth 36,000 Aussie at the time. I'm a 17-year-old strutting around the school like I was Richard Branson, and then I lost it all. So my first trade was very successful. However, because of the way I didn't manage it, I lost it all. So my first trade was a big lesson in risk management. From there, I thought I wanted to be a stockbroker. I didn't realize at the time a stockbroker, what I actually wanted to be was a trader. I got to London when I was 20, saw a sign on the tube that said, learn to trade the stock market or something like that. Come to this seminar. So I thought,
Really?
I'm going to this seminar. I went to the seminar. I got sold hard. It was a bunch of bullshit. That it was my beginning. From there, I ended up getting a job with a similar seminar company because I thought the best way for me to learn is to be around the people that are trading. I haven't got any money to be, I had some money, but I didn't want to be spending it on that. I was too young to realize that investing in your education is really important because I knew everything, of course. And I started learning from these people. So I was there at 5:30 in the morning for the trading floor, getting their teas, going down the road to Pret, buying their sandwiches, doing all that legwork that a little maggot does when you're trying to learn. And that's how it started. I just started helping the guys on the trading floor and learning from them, and they started to like me and give me some of their time. And from there, just the same process as just about every trader, man. Like you think you've got it, then you get humbled, and you think you've got it, then you get humbled, and you go through that quite a few times. Blew out 3 accounts, and then sort of got to the point where I went, okay, I got to work this out properly. And the biggest issue with my trading was this guy. It wasn't my knowledge. I knew what to do. My problem was the ego. It was wanting to be right. And when I did something wrong, I wasn't holding myself accountable. I wasn't being accountable to it. I was sweeping it under the rug, like you tell all your mates about your good trades, right? Well, what about the shit ones? You don't hear about that. So, fast forward a couple more years, I found a really fantastic mentor by the name of Nick McDonald.
Oh, yeah.
And Nick?
Heard of him, yeah.
Yeah, Nick McDonald, Trade with Precision, does a lot of stuff with CFC.
Yeah, he's over here in New Zealand, isn't he?
Yeah, he's a Kiwi. Yeah, I think he might be like you're 2 hours north of Auckland. He's somewhere around there.
I've met him. Yeah, I met him. I didn't. Yeah, it's such a small world, isn't it? Yeah.
That was my guy. So he taught me checklists. He saw where I was like, I can be incredibly disciplined if someone goes, point and shoot, do this, just do this. That's all you got to do this. Okay, cool, I'll do that. And I did it, and it changed everything for me. And now that's what I pass down. I teach that same. I mean, I have altered the checklist slightly, not a huge amount. I've actually taken things away, so there's less on my charts than what there was originally. But through that systematic approach, I've been able to be doing this pretty much full time for at least, well, what am I now? I'm 41 years old. I started doing it when I was 21, so 20 years. But 4 years I wasn't successful. I was up and down. From there, I've been pretty much full time. I've been at least 15, 16 years full time, making my money from the markets. And I also do things like mentoring, that sort of stuff. That does help with the revenue. It's not purely from the market, but the majority of my money is from the market. It's been good.
Totally get you. Totally get you. So when you say the floor, I mean, I assume you mean the kind of electronic floors, not the live floor, not
When you
the
say
live
floor?
floor. So not the kind of open outcry. When you say you started on
No,
them,
no,
I mean,
no, 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 no. This was a room of, I think there was like 8 guys.
okay, yeah, got you.
And they were all in there trading. So it was a small group, and
Yeah,
they would all trade together. So I was in there with them, being their,
got you.
you know, being their lackey. I got an invite because I used to do videos for the Intercontinental Exchange every week. So I'd
Hmm.
analyze the Russell and the dollar
Yep,
index, and they would go
yep.
out to all the hedge funds and all the players. And I got an invite with Nick to go to New York and to spend some time on the actual floor.
Yeah.
So I've still got my little pass, your little clip.
Yeah,
More security to get into that building than there is probably to go to the moon. It was quite
for
wild,
sure.
but it was there's a story in that too. I was wildly hungover, but it was a great time. And I think I was like, I don't know, 26 or something back then. But I've been on those floors and I couldn't believe how quiet they were. But that was, 15 years ago. So more in the modern era and less of the sign language and shouting than what they used to be.
I've got you, mate. We're a similar age, so I used to run Schneider's, the live floor there, and I used to start trading. When I started trading, it was one of the original Revco grads. So I was on Liverpool Street. So yeah, it's deadly silent, mate.
Yeah, I know where I was. I went in there.
Oh, mate, yeah, you got the escalators, got the arcade on your left, then the floors.
Yeah,
But
they wanted
yeah,
me to trade for them. That's a prop desk, right?
yeah, for sure, mate. Yeah, that's what they are.
Yeah, that's so I came in there. They were asking me to trade to join the team.
Yeah, 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 yeah.
I know this is a recorded conversation, but it's kind of like a bumping into an old friend.
Do you know what, mate? I have this every time. That's why I started doing because I was originally interviewed. Because I've written books, I've traded for 20 odd years, like yourself. And then I was like, "Why don't you do some interviews?" I'm like, "Yeah, speak to other traders." As you know, it's a lonely game. This. So if you can speak
Yeah,
to people, it's like, "Do you know him?" I'm like, "Yeah, he's down the road." I mean, we
yeah.
could probably talk after this, but yeah, I'll know the guys from the floor. I was doing Braveheart was there and that kind of stuff. So yeah, there's loads of that kind of stuff. But let's focus on you. It's
Yeah, yeah, yeah.
what I'm really interested in is this whole kind of crypto thing because I've had an interview with some other crypto traders because it's not what I do. That's by the by. What's your bigger kind of view for kind of Bitcoin and crypto? Because we all understand that currency is being debased, right? We all get that. So is crypto the answer? What's your bigger? Let's start with the bigger picture. What do you see the bigger picture for Bitcoin and crypto plays in the world?
I think that it's a very low risk conversation for me to have in 2025. Going back to 2017 when I got into it, and I had a podcast in 2018, and it was a big podcast. I was saying what's happening now is going to happen. So I guess from the standpoint of what I think is going to happen, well, it's happening. We've got nation states, or not nation states, but nations that are now acquiring Bitcoin and doing well from it. We've got, I mean, the talk of the town, of course, has got to be BlackRock. BlackRock's now in with the ETF. It's the fastest growing ETF, most successful ETF ever by a long way too. And it's been extraordinary, the uptake of the Bitcoin ETF from BlackRock. Of course, there are many other brothers and sisters of smaller size ETFs that are available as well, but BlackRock's the big talking point. You've got now, large S&P 500 companies that are now having Bitcoin as their treasury asset. They're not just sitting on cash anymore, because if you're in money markets, everybody's probably, or people that are watching this understand how money works probably more than most, because a lot of people will be trading currencies. They'll be trading foreign exchange. I know that's where a lot of my volume was as well. People that have a lot of money know that if you sit your money in the bank, you are losing money every single day. Now, it just depends. If it's on target, it's going to be what, 2.5 to 3.2% per year. your buying power decreases. And that's just based on the basket of things that they put together. That doesn't include oil, right? It doesn't include accommodation. It doesn't include the biggest costs that people have. So in reality, your buying power is significant. It could be up to 10, 15%. I know when COVID was going on, and after COVID, we saw that massive inflation spike the world over. People were watching their balance sheets. They were losing 10 to 20% buying power in the space of 2 years for sitting in cash. And people say Bitcoin's volatile. Man, I tell you what, Bitcoin is volatile, but it's volatile over periods of time the right way. Yes, you'll go up and down, which is the reason I love trading crypto, but it's in a steady trend in the right direction. Whereas 100%, if I sit my dollars in the AUD, in the GBP, in the USD, the trend is clear and it is there and it looks like that. It is a downtrend. You're losing money in fiat. Okay. So I think more and more people are starting to catch on because they're being led by the world's leaders. They're being led by governments. They're being led by very intelligent people that are speaking on the behalf of Bitcoin, right? And you're being now led by major corporations, publicly listed companies that are out there actively not just buying Bitcoin and being quiet about it, but when they buy Bitcoin, they are loud about it because now they've got something that differentiates them. Their stock price has been doing very, very well with the Bitcoin treasury strategy with very strong yield to dates of those companies that are doing that. So I think that we're going to see that trend continue. I believe that we will see that pick up. Don't get me wrong, there's going to be periods of volatility. I believe that the volatility may start to wane. What we've seen over the last few cycles, Bitcoin's very good with the cycle. They have a halving cycle where the miners get half, that sort of thing. Look, I'm not going to go into detail there, but anyone who's wanting to understand it, if you like market cyclicity, which you have to if you're a trader, then this is the most cyclical market you're going to find and the most blatantly obvious cyclical market. So that's in our advantage. But the cyclicity of that halving event, you can almost set your watch to the volatility events roughly, within a year. Now, I think that volatility to the upside and the downside is going to shift as more Bitcoin gets taken off the market because there is only 21 million Bitcoin and I think up to 6 million have been lost. There's a limited supply. So as these companies that are buying it up are not looking to sell it, they're holding it on their balance sheets. And now with the different accounting rules that have come in the US last quarter, I think it was, they can now list Bitcoin as an asset. Okay, so that will now reflect against their share price. So they can actually report we are up 6 billion this, because of the growth of their Bitcoin. It doesn't have to be revenue related to the sales of the product of whatever that business is. So I think they're going to hold their Bitcoin. There's going to be fewer Bitcoin on the market. So therefore, I think the potential for those really big 80% corrections might start to slide out. And the best way to compare it for most people to understand is .com. Look at the NASDAQ. The NASDAQ used to had that massive boom, didn't it? 2000 and a massive crash. We see the NASDAQ operating more or less the same as the S&P 500 or the Dow. Because it is now a solid index with many of the S&P 500 companies coming from the NASDAQ and sitting within the S&P 500. So the stability is starting to come as more and more big players come in. So I don't think it's going anywhere. I think it's going higher. And I think that a lot of people look at Bitcoin and go, yeah, but it's $108,000 a coin. I'm not buying that. I can't even own one. People looking at it the wrong way if they're looking at it like that. If for no other reason, I think it's completely irresponsible to not have at least a couple of percent of your portfolio that is sitting in Bitcoin, if for no other reason than a hedge.
I totally agree. I totally agree. What I've kind of found is I can't see how you do long-term kind of investing on like your CFD platform, buying Bitcoin because of the volatility. So the only option would to buy a physical Bitcoin or a Satoshi, maybe put it in cold storage. That just made perfect sense. That's logical. But yeah, the way I trade, and again, I'm not an investor. I just can't see how you could hold a Bitcoin position, in a kind of traditional day trader or kind of investor stance with a CFD broker or your average brokerage without getting stopped out. It's kind of, even though the trend is clear, the amount of money you'd have to have a margin is quite hard. It's Bitcoin investing, not trading. That's what I'm trying to get to.
Yeah, the difference for the two. So I guess the one box that I just explained is invest in Bitcoin, own some Bitcoin, spot Bitcoin. There's no fees in that. As I say,
Yep.
buy it, send it to cold storage, wait for 10 years, see where you're at, buy a house,
Yep.
whatever.
Fine.
The other side of it is trading. And I mean, I think it comes down to your style. Do you know what I mean?
Yep.
Like if you're, it depends on how you're trading. If you are trading Bitcoin and having big positions with a very big stop, then you're absolutely right. You are going to need to have a lot on account, and you're going to have a lot of margin. You're going to have a lot of fees, but that's not going to differ between whether or not you're trading Bitcoin. I mean, the fees might be slightly different, or if you're trading a long futures, like a futures contract on corn. There are still going to be associated fees. If your stop loss is wide and your positions are big, you are still going to have to use the same amount of margin. It's the rules of engagement are exactly the same with crypto as they are for any other market. The 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 thing that I love about crypto, and this is the bit that I think you'll really understand, Steve, is if I'm trading if I'm trading cable or GBP against USD, I'm risking $2,000 on the position. So if I get stopped out, I lose $2,000. If I have a good trade over the space of a week, let's say I'm trading a daily chart, just as an example, I might get a multiple of 3. So if I've got like 50 pips of risk, it's got to be 150 pips in my favor to have a 3x multiple of the risk. So now I've got 6,000 profit on my 2,000 risk. That's a good trade in FX in a week on a daily chart. It's a 3 multiple of risk. In crypto, that could be 30. So the same amount of risk for a much more significant upside, of course, on the trade, doesn't matter if you're long or you're short because you're trading futures, right? The same amount of risk with a far greater volatility score means that if I can potentially have less trades, which means less accounting, which is the worst part of being a trader, and I can make more money, giving me more time to do what I love, which is go fishing. You know what I mean? Like I can less is more here. Less is more. Like I'm sitting in a position right now that I'm looking at it on this screen. I'm at a 22 multiple of my risk currently right now. I've been in that trade for 3 weeks. It's been put up on my socials at Traded Cobb on X, Craig Cobb on Facebook, and on my newsletter. My community is actively in that with me as well. It's a 22x of risk, 3 weeks. Now, if I just took that one trade alone, I don't have to do anything else for a few months now, do I? So that you are going to get stopped out, but so too are you going to get stopped out if you're trading equities or you're trading corn or you're trading index futures. It doesn't make a difference. Trading's trading. There's going to be winners. There's going to be losers. The winners are just astronomically larger. That's why I've dropped. I don't trade gold anymore. I don't trade commodities anymore. I don't trade FX anymore. I don't trade equities anymore. I couldn't give 2 hoots about any of those markets because once you've had crack, you don't go back. You know what I mean? It's
I
addictive for a
guess
start,
not.
but it's good. It just has that ability to take a small account and make it a big account, and I think that's what's really attractive for your new trader, because it's all good, but I can go and trade FX with my account and I can still make a living out of it without having the really big returns. Just you're chipping away, and it's enough because we've built a big enough balance over the 20 years we've been trading. But for Johnny down the road who's like, oh, I want to be a trader. Well, he's got $5,000. He's probably not going to commit to it. It's not exciting.
We all know, traders are underfunded, but nobody wants to hear that, and that's why they flock to the prop firms. But at the end of the day, like any business, anything, if you're undercapitalized and you're having to rely on profits to live, that was I was the same, mate. I had a big trade when I first started. I was going to take on the world, and then reality hits you. You get a few losses, and then you got to pay the bills, mate. And again, like, I'm not from money. I'm not from a trust fund, and life gets pretty boring when you're knocking around London with a lot of like traders who have made it, and it's kind of like.
Oh yeah.
You know,
Not by shout.
yeah, exactly. You're the guy in the back. Yeah, no, I bought the first round. It's on
Yeah, yeah.
you. But yeah,
I
I mean
hear.
that's the same
I
for
hear.
everybody. Well, listen, but we've been through it, and again, I think that's what people don't understand about traders is, you don't just rock up and you can make money very, very quickly, but then the consistency and the amount of time you've got to and money to fund yourself, especially if you're like myself, paying for your desk fees and that kind of stuff. The associated costs you have to be making 6 figures to almost break even after tax. So it's not something you go into lightly. So I get Bitcoin. You've described that. I mean, what's the rest of the crypto space right now? What is it? These altcoins. What have you got your eye on? What's kind of interesting for you at the minute?
Well, today, as it stands, bugger all. For for me, altcoins. We're not talking about investing here. We're talking about trading. So for me, I couldn't care less. Look, I'm very methodical. I'm pretty a bit of a loose unit when it comes to lots of things, but when it comes to my trading, that's why I've got checklists. I'm very freaking disciplined. I literally follow checklists. So all I'm looking for, just to make this very clear, I'm a trend follower. Okay, I follow trends. That's it. Like if the market's sideways, I'm out. I'm not interested. I'm out. I'm not here. The markets are in a bit of a state of flux at the moment. Bitcoin's still strong. There's a few alts out there that are still trending, but we need the alts to kick back into trends. That being said, I'll scan. I think it's 486 different cryptos each day. Now these are the 486 cryptos that I have that I know I can trade with margin. Okay, on the platforms that I trade with it or trade on. Out of those, today I think I've got 4 that I'm willing to watch. I have not raised any orders today, but I am watching those because they've got cyclicity, they've got trend, they've got the first sort of say 3 or 4 items within my checklist that I need to have before I take a trade. Now what I'm doing is I'm waiting for them to come back, and I'm waiting for 5, 6, 7, 8 to set up. Then I know I've got a trade. Then I'll raise the order. So some days there's plenty going on. Other days there's bugger all going on. The worst market for me is when it's sideways, because I'm faced with a choice. Yes, I can squirrel down to the lower time frames, look at the 15-minute chart, the 30-minute chart. But what that does, as I scroll down to those lower time frames, because of my account size and the risk that I'll take on each trade, it diminishes the list because I have to have the pairs that have the highest level of liquidity. Top 10 to 20, usually fine, because obviously my contract size has become a lot larger when my stop loss is a lot tighter. So it's a day-by-day assessment for me. As a whole, I think we're going to see a strong performance by a number of altcoins. I think, excuse me, I think gone are the days like, I remember back in 2017, I didn't do anything in the ICO craze because I was just getting myself into crypto. And I'm like, I don't understand this. I'm just going to trade it. And I did really well from it. But the ICO, you could just basically put money into anything and it would just explode you 10, 20, 30, 100 extra money. And it was money for jam. I didn't take advantage of any of that. Because I was strict, because I got disciplined, I didn't do it. In 2021 bull market, I was positioned quite well and did extremely well. I don't think we're going to see, because 2021 was kind of an extension of 17. A lot of things did really well. I think the longer we go, the more mature this market becomes, the more wise people become. They're looking for certain things that produce revenue. So, going back to the .com, like pets.com was $1 billion listed company. What did they do? Nothing. I think there was a lot of cryptos that did exactly that. They filled no void. They created no product. There is no need for them to be there. However, everyone hyped onto it, and now the market cap's $1 billion. God knows why. Who cares? I made money. Oof, I'm out. I think what we're starting to see now is a bit of a shift towards, which is wonderful for me, value investing. God,
Yeah.
imagine that, finding a company that actually deserves to have success as opposed to a picture of a dog with a goddamn hat. So
All right. Yeah.
I think it's maturing, and I think that those that invest in themselves and start to know what to look for will do well. And I think some of the old school players, I've been here for quite some time now, but people like you, Steve, and other people that have been investing and trading for a while that do have an old school methodology, like an equities mentality. What does a company do? What are the ratios? What are the debt ratios? What's the margin? Like what do you actually do, and how much money do you make, and what are your plans and what are your projections? I think that's going to start to come into crypto a lot more, and I can't bloody wait because it's going to make it so much easier. So, and altcoins, they're not going anywhere, but you've got to pick the right ones now, man. And that's trading for me is what I do. I couldn't care less about them. Aside from whether if they're trending, I'll trade them. If they've got enough liquidity, I'm all in. If not, don't care.
Okay. So, what do you think is going to be the next catalyst for kind of crypto in general? What do you think about this strategic reserve, Trump, kind of the Trump coin? What's going to tip it? Is it going to be a big cut in interest rates? You hit the nail right on the head. It's like, for me, I've traded, FX indices and gold for 20 odd years. I don't understand how that works. And someone's like, "Oh, just buy Bitcoin, it's going to moon." I'm like, "But why?"
Huh? Yeah, exactly. I know what. Yeah.
So it's kind of like, is it going to be a fundamental shift, or is it, like you say, is it going to be down to this more legitimacy the ETFs, the kind of the big boys getting involved, or will there be a big drop off? A big squeeze before these kind of funds go into their second, third waves. I mean, it just seems to me, like if we're going to take on the centralized system by Bitcoin, which is decentralized, this whole system we built on fiat, if that goes, is Bitcoin big enough to fill the void? And even if it was, is the system going to allow you to A, keep it, or B, use it? That's my kind of like main thing that I can't get my head around. You don't beat the banks, you don't beat the big guys. We know that. We know that. So what is their kind of plan? How does this feature, over the next kind of, say 5 years when we're going to see these probable, shifts in interest rates and probably a further debasement of currency? What's going to be the trigger for crypto? What is it? What do you see that being?
I think you've already said it. I think we've already seen it
You reckon?
for Bitcoin anyway. I mean, there's a form of legitimacy. I remember in 2017, 18, 19, you've got Jamie Dimon out there saying, if you touch Bitcoin, I will fire you. That was it. You work for my bank, you touch Bitcoin, you're gone. And they did that. So against it. And this is why back then I was saying it's very simple. They can't make money. There's no fees for JP Morgan for Bitcoin. So every single dollar that goes into Bitcoin or crypto is a dollar they're not making commission on. It's very easy to understand Wall Street and bankers. It's just money. How does money flow to them? They give two shits about anything else. They are it's like a crocodile. Okay. A crocodile wants to kill you. So don't stand in front of a crocodile where it can kill you. Bankers want to make money. That is it. That is the only purpose that they have. It is so transparent. Well, what does the ETF do? It means they can make money from Bitcoin. It's already happened. The legitimacy is there because those that call things legitimate, and we're meant to trust. Let's not talk about the GFC or how they didn't get prosecuted for that, because we were trusting them, right? Let's not forget about that. That's real bad to talk about. They are the oracles of finance. They are the ones that make the world go around, and unfortunately they do. But they're greedy motherfuckers. They don't care, man. They don't care. They want to make money. They can now. They can make money. A catalyst, aside from all of the catalysts that we've had, so I have information flows, as you do, as we all do with the markets that we trade. The sort of information flows that I'm after who's buying what, when, and why. Okay, I don't need the why, but I want to know who is now looking at adding Bitcoin to their strategic reserve, country-wise. Who is adding Bitcoin as a treasury asset? And I'm looking at this, and every single week I am seeing this undercurrent that is not spoken of wildly, unless you know where to look. You're not seeing that because the crypto mainstream media, what do they want? They want Bitcoin's got a new all-time highs, or somebody just got kidnapped and had a gun to their head because they have crypto, or somebody just got hacked and crypto's bad, or a whole bowl, someone's crypto wallet's in the dump and they're spending $50 million to try and find it. These are the no-brain, dumb stories that they want to run. Okay, so if you're looking at that information, yeah, you're going, this crypto thing seems like a lot of rubbish. Jesus, what a lot of crap. But if you're looking in the right areas, you're seeing this groundswell, and it is huge. I've never seen anything more positive for any asset class ever than what I've been watching with Bitcoin for the last 18 months. Okay, it's incredible. The next catalyst, I think, will be a really solid framework around regulation in the United States of America. So far, we've got all this talk. Are we going to make America the crypto capital of the world? And it makes sense because there is a lot, like, whether technology is always going to be how we develop. Okay, countries are not investing more money. They're not investing more money into how to swing a hammer or how to be better laborers, right? They are investing money into what is the next thing. Look at AI. AI has not been around as long as crypto, but AI for some reason didn't have the headway crypto faced. But AI is arguably way more dangerous and controversial than crypto, but it's owned by centralized players. It's the decentralization of crypto that scares the banks until now they've got their grubby little hands on it. They've got their grubby little hands on it. They're going to send it higher because, again, they only want money. So all the pieces of the puzzle are in place. I think that regulatory framework in the US, if Trump would get on with it, that'd be super duper. Something else in that, just inside of that, when I talk about that groundswell, is if you're looking at who he's putting in his cabinets in these different places, there's a lot of crypto good people. Now, we've never had a cycle in Bitcoin and crypto in general where we've had a positive landscape, a positive view of cryptocurrency in the United States of America. We've never had it. We've had prosecutions to everybody who tries anything. Coinbase was sued without the SEC. They went to the SEC and said, "Hey, SEC, we're operating here as a legitimate cryptocurrency exchange. What should we do? What are the rules? We will sit down and work with you." They said, "No, sue you." What? Pay the fine. What? And then, whilst this was going on, the same company, the same government said, you can list on our stock exchange, but we've also got an active case against you. What? So they made it intentionally blurry and very difficult for business for the startup culture to flourish. We know San Francisco's dead. The .com boom, you look at Silicon Valley. It's more like, I don't know, like something cheaper than Silicon Valley. It's not what it used to be. Big money's in Dubai. They're all fleeing to places where there's investment and there's a regulatory framework that they can actually operate within. And they're going to go and put a bunch of their time and equity into building something new, and they're not going to be prosecuted for doing so. America wants that business. And if they can get that framework in, they're going to invite it in. Places like Austin already have a pretty open, a lot of people in crypto are in Austin doing their thing there, different regulations or something like that in that state. But I think once that opens up, I think we are going to see a big shift, and I think it's going to, crypto is the next .com. It just is. It's growing at a faster. Bitcoin addresses and wallets are growing at a faster rate than internet usage. The writing's on the wall, but again, it's not on the wall you might be looking at. That's the issue a lot of people have.
Yeah, I think you're exactly right, because you've said a lot, which is great. But a couple of things, I'd pick out is you're exactly right with the narrative. It's almost like they control both sides of the narrative. Like they want the cake and eat it. So Bitcoin bad, you can't have it. Oh, Bitcoin good. Let's make sure we can all benefit from it. And when you say we, the banks, the Trumps, the millionaires, the billionaires. I don't dispute that for a second. So it's really kind of interesting what you say as well about knowing where to look for information, because the mainstream media, will feed you whatever narrative wants to feed you. So there's lots of places to find information, and you have to be a free thinker. And that's something I've been banging on about for the last few years, wrote it in my book. But people don't want to be a free thinker. They want to be told what to do. Buy it here, buy it for this long and hold it. People have lost the ability to make their own judgments. And you can understand why that scares people, because Bitcoin, and it's new. I mean, it's not new, is it? We're 16 years into it. But I think people now, we've seen that steady kind of, level of over 100,000 being held. And people are saying, well, it goes back down to 70, I'll buy it. And so, well, it might not. So it's like, what do you do? Once you spotted a trend, you've already missed it. So what do you kind of advise guys, to do now? Is it just look for that upward trend? What have you got some big limits? Do you think it's going to 1 million, 500,000, 250,000? I mean, what do you think? What should we expect? We've seen gold explode. I was trading gold at $256 when I've started. Look at it now. So I mean, anything is possible. So I mean, what's your kind of like short, medium view? How do you look at it, kind of going forward?
Well, you're bang on, mate. And that is, I mean, look, if I had a crystal ball, I'd be on my yacht. So I can tell you right now, I was deploying capital again, because for me it's an all in and an all out. Yeah, and you take a year off because you can. When I say you can, I don't just mean, I'm not just saying that from a look at me, I'm so great, I got lots of money. It's not from that point of view. It's from the point of view of you've got a year before it's going to be volatile and shitty, and it's going to be boring. Go to sleep, wake up again, and then buy when it's it's all shaken out. All the bad stuff's happened. Then you jump on for the next cycle. But I mean, when I was buying in August of 2023. For me in Australia, there's a capital gains tax window. So again, running a business is different to just buying and selling. Everybody goes, "Oh, I've moved from this to this," and it's like, no, you didn't. And if you did, you're done, because you just had a tax event that you've now got to declare, and it's cost you an extra 25%, because now you've got to pay 50% capital gains tax within 12 months. You're an umpty. You shot yourself in the foot for nothing. Then you can do it with over here. You might have made more gains, but you're not getting as much money because you played it wrong. So that's the business side of it, right? So you've got to buy at the right time to get outside of the windows of tax, right? I was buying Bitcoin back then in August, and my portfolio, I'm outside of that window. My first target for Bitcoin was 120,000. And at that stage, I had a good return. I was going to start selling at 120. Now it's taken longer to get to there, and we are not there yet. This has been a more of a delayed cycle this time around. Normally, it would just about all be wrapped up by now, right? If it had have followed similar years or similar cycles, sorry. However, I was under no illusion that things have changed more significantly for this cycle than any than any cycles in the past, because it's not just driven by retail; it's driven by big business and banks. So I've had to reassess my targets. My first target is going to be about 150. I'll be selling some Bitcoin around 150,000, provided it gets there, obviously. And then I'll be selling some more at 180. And then I'll probably leave about a quarter on to see if it does go super cycle. And if it does go super cycle, then I'm just going to keep trailing my stop loss, I'll lift my limit order or my stop order on my spot buy. So I'll move it back onto an exchange and I'll have it actively sitting there to sell and to move my money back into my cold storage, and then to speak to my accountant on how to get it all back. So there's a shift, and again, it comes down to having good information, because as a trader, you want to let your profits run and cut your losers short, right? That's the same as we want to buy low and sell high. Yep, but you've got to have a method behind how you actually achieve that. Saying it and paying it lip service, it's kind of like them saying, "Oh, the most important thing about trading is managing your risk." Well, don't just pay it lip service, brother. Understand what that means. Have a plan for your portfolio, because if you don't, you're going to learn real quick. So adapting to what is and letting those runners run while scaling out as you go to keep this old thing in check. It's much easier selling into a market that's rocketing higher than it is selling in when it's falling. I find that to be absolutely crucial for me. Because as you said before with regards to Bitcoin, I'll just buy it when it gets to 70. Well, what if it doesn't? Same thing as when it's raced up, it gets to 180,000 and now it's pulled back to 150. You go, I'll just sell it when it gets back to 180. Well, if it does get back to 180, you're probably not going to sell it then anyway, because now your greed's kicked back in. You think it's going to go higher again. So I'm looking at 150 to 180 for my first two targets. Typically for me, with all my investments, aside from Bitcoin, because it is the more safer, I suppose, in my portfolio, which I always start my portfolio 50% Bitcoin and hold that, I'm looking at a 5x multiple. So if I buy something like Near Protocol and I put 100 grand in, and then it gets to a point where it's worth 500 grand, well, I take my 100 grand off now. Now it's free, right? It's a free trade. That's why investing. When I'm trading, I do the same. I'll often scale out at 1-to-1, because I don't know what day the market's going to rip higher or rip lower. I've got no clue. But if I'm in a position with no risk, I know I've got a foot in the door with zero risk. It allows me to remain clear to find the next trade and to be able to take that next trade without having the burden of, okay, I've got 3% risk I'm willing to risk per day. 2% risk per day. 3%, if I'm down to 3% in a week, I cut it, I stop trading. If I'm down 2% of the day, I cut it, I stop trading. These are my parachute points of your shit today, back away. But having those plans in place, it's super important. But again, coming back to it, Steve, people don't want to know that. They don't want to know that there's a lot of work to get results that good traders do. And I always say to people, don't try and get the results that good traders get. Do what good traders do, and the results will come.
You're so right. I mean, people want those quick fixes. People they want to buy the Lamborghini tomorrow. That's what you kind of get marred with when you talk about trading. Bitcoin. It's people are doing it for show. But I mean, obviously, when you've traded for long enough, like we have, there's inevitable ups and downs in everything. There's patterns in everything. Things go up, things go down. But it's people don't focus on the kind of the long term and they get so dejected early on that, and, like you said before, there's no shame in blowing up accounts. There's no shame in learning. That's how you learn. You learn by losing. And I tell you what, nothing teaches you more than losing money.
Oh, no.
Well,
Losing your own
nothing.
money, that is.
Exactly right. Exactly right. Yeah. Nothing. So I mean, what's interesting as well when you talk about these numbers, Bitcoin predictions. So I mean, you a technical trader as well. I mean, do you plot things? Do you use any kind of specific indicators, or is it more around numbers and feel? or is it just kind of it's going up, and that's where you kind of feel if you get in a level that'll be a 2, 3, 4, 5 times X? How do you kind of come up with these your outs?
As a trader, it's all technical. Everything's based on a chart. That's why, when I said I've got like, I think 6 in my watch list out of 486 today, that's all just based on charts. Half the projects that I'm trading with margin, right? I have no clue what they do. I don't care what they do. I will trade your grandmother's curtains if there is enough liquidity. I just don't care. It doesn't matter to me. What matters is that what I need to see to fit my specific strict strategy is there. If it's there, I will trade it. Okay, then I apply the risk management to it. So it's all TA. My charts are remarkably simple. I have a 10 period exponential. It doesn't matter if you have EMA or SMA. It makes no difference. But I just have the EMA, 10 and 20 EMAs. That's it. I don't have the 50. I don't have the 200. And people go, why don't you have the 50 and 200? I go, why do you have it? I don't make any decisions based on the 50 and the 200. So therefore, it's just noise. Get rid of it. If I don't use it, why is it there? I use a MACD. The MACD, and I take away the histogram and I take away the signal line. All I have is the MACD line. I'm looking at trend, okay? Cyclicity of trend, which essentially the one and the same when you look at it in a certain way. Zones back into a certain zone, which is what the moving average produce, and convergence between my MACD line and the highs, the extremities of the trend. I keep it really simple. It's for me, my trading is about trend following and price action, because I get people that go, oh, the indicator did this, so therefore this is going to happen. It's like, you have to understand something, especially with here's a real bugbear I've got. Oh, there's a golden cross. Who cares?
Oh, yeah.
There's a dead cross. Oh, and I'm like, listen. What are those two things that are crossing? Oh, they're moving averages. What are they? Moving averages. They're moving averages of what? Oh, the price. So what comes first? Without price, there are no moving averages. So price is the single most important thing you will have on a chart. So why don't you get married to price and forget about the side girls with all these stupid indicators? Because then you'll build something long term, understanding how price operates in relation to a few very, very small things, but becoming a master of it. Like most of the best, most catchy songs in the world are written off 4 chords. Those 4 chords have made the music industry hundreds of billions of dollars. 4 chords. You don't need to be Carlos Santana to have a hit. But those 4 chords, you need those most times, right? Well, that's what I do. I try and find those 4 chords. I found my 4 chords in trading. It's price action, 2 moving averages, and a MACD. And then I become really damn good at that. That's it. I got 2 strategies that I teach, 2 strategies with checklists, because I use 2 strategies. There's no secret to it. It's practice. It's practice. It's practice.
It takes a long time to get your charts simplified. It takes a long time. If you can't explain your strategy simply enough, you don't understand it. Simple as that. And you're still right. These kind of technical whores, they're kind of like want to tell you about Heikin-Ashi candles. Have you tried that, Steve? I'm just like, what's up? But yeah, to make your trade, I know it is though, isn't it? It's just kind of like there's no secret squirrel set of indicators that's going to make you money all the time. The markets just don't work like that. So no, it's refreshing to hear that. Yeah, but that just shows you've been doing it for a long time. Doesn't it?
I love that because I with my business of teaching people, it's something that I really, people are going to listen to this and go, you're full of it. Reality is I do enjoy working with other traders. I've got a great Discord community. So as you said at the very beginning, it can be pretty damn lonely. I got a great community of people, boys and girls, of men and women in there. We trade together. We share things. They've all learned my strategy, so they're all seeing things the same way as me. I get to help them. They help me because I'm accountable. It's a really good thing, and I enjoy helping people. But I have to be a little bit more tactful with my responses. Oh, have you seen the Ikachoku Muku cloud? I'm like, I want to say,
that's interesting.
Shut up. But I say, do you know what? I actually haven't, but if it's working for you, I'm happy for you. Or what do you think of this? I don't actually think of this. Or what do you think of what this person says? I don't listen. I don't know. I found what works for me, and that's all that matters because I make my decisions. So it's a fine line.
Yeah. As we said before, though, some people just want to be told exactly what to do. And the market just isn't like that. If it was as simple as that, mate, as you say, we'd both be on our yacht. It's kind of I've done well as you've done well, but it's finding your own path, being able to trust yourself enough in your own judgments. And you can teach that and bring people to a point, and you can open the door, as I say, but you've got to walk through. At some point you've got to take responsibility for your own actions, your own plan. Because if you don't, you never ever have the confidence to see it through. And success will just it'll be fleeting. It's the people that are a little bit, I don't want to say arrogant. I'm not saying you're arrogant. It's people like us that believe in yourself and have done it enough times to made all the mistakes. And you can talk a little bit free and candidly because, as you say, there's no bullshit. You've either done it or you haven't. You can either have these conversations or you can't.
Yeah, we've heard this bullhead. I know, I get it. Totally, man. Like it is like that. And look, what I do is I provide a blueprint. I don't provide success. That's the thing. And the same people that you're saying they want to be told how to do everything, and that's okay. Like I needed to learn as well. You got to find a way to learn. Don't we? Go and forget that the reality is that people have got to find a way to learn. But those same people that want to know, be told to do everything, they're also the ones that won't do any good because of one thing. They lack one, or they lack two things. They lack accountability and grit. Like those two things will get you through just about everything in life. If you understand what you did wrong, or if you don't understand what you did wrong, but you did wrong, that's the first thing. To be able to go, hey, I don't know, I'm sorry, I messed up. That's the beginning of learning, right? The second one is having the grit to have to do that so many times that it's painful. My God, why am I not there yet? Oh my God, here I am again on a different issue, but here I am again. The grit gets you through that. If you don't have accountability and if you don't have grit, you can do as many courses as you like. You can sit next to me every single day and you'll still suck. Because, here you are, you're on my breast, I'm breastfeeding. Yeah, you got to grow up at some point. You got to take accountability. You got to realize that the buck stops at you. I can give a blueprint. I can't make you successful. And I think that's a big step. And look, I also think a lot of people are like, oh, I've done this course, I've done that course. And okay, so like, do you really want this? Do you really think that you're going to land on the eureka moment straight away? No, you're not. You're gonna follow. I know what I'm doing. My strategies work for me, and they work for a lot of people. But for some people, they don't because
Yep.
there's something there that just doesn't compute the way
We're all
I do.
different. We're all different, of course. Yeah.
That's right. So you're gonna have to keep trying. I mean, at the end of the day, I can tell you right now, I knew what I wanted from a very young age, and it's been a bloody mission to get there. But it's good. And was it worth all the ups and downs to better live the way that I live? Yeah, I mean, I'm rebuilding. I lost a lot of money in FTX collapse, a lot. So I'm in a rebuilding phase. I'm still able to live an unreal life. I'm still very happy with how my freedom that I have and what I do. I love where I'm at. I've had to rebuild. I'm at 41 years old. I had a lot of money. I was very well off. Everything was great. And then boof, I got humbled again. There's another lesson for me. Am I just going to cry into a ball and give up? No, I'm back. I didn't lose everything, but I'm rebuilding and I'm rebuilding at a rate of knots. Once you've got it, you've got it. But you've got to do the work before you've got it. You know what I mean?
You're so right. Because it for me, motivation has always been money from a young age, but then there's the momentum. So you're going to find that, different points in your life, you're going to want different things. And, once you've got the watches, the cars, all that kind of crap, it doesn't become meaningless. And it's easy to say when you got stuff, the stuff doesn't matter. That's bollocks. Everyone likes stuff. But it's this momentum that keeps you going. And, I think a lot of people, like you rightly say, don't have that grit. And just kind of like when the going gets tough, that's what separates, from the guys that make it, the guys that don't. If you can't have, a couple of years of eating beans on toast and noodles, mate, you haven't really done it, mate. You haven't really tried. You've got to have that bit of pain. I feel and that's just, that's my ability as a trader is to take pain. That's how
And you
I've
can go
survived.
from Rolex to Seiko and back to Rolex. You know what I mean? Like
Yeah,
you can
exactly,
do
mate.
that.
Exactly, mate. I mean, that's great, Craig. I mean, it very, very insightful. Yeah, I've really enjoyed that. I mean, is there anything you want to bring? So you've got the Grow Me Co, which is your Discord Discord and how you talk to traders.
Yeah. There's
How's the
this.
best way to kind of contact you on socials? What if people want to chat to you directly?
Yeah, the best way to get me on Facebook, I am Craig Cobb, which is spelt right in front of you just there. On the GrowMeCo, so .com is all you need to put in there. Go and join the free newsletter. I put out every Tuesday, which is today. I put out market commentary, bits and pieces, that sort of thing. You get a feel for what I do, how I do it. And on X, I am at Trader Cobb. So the word trader, COBB. Always when you're searching my name, look for the blue tick because I spend money to be verified so that you don't get scammed. Please understand that and look for the blue tick because people are pretending to be me all the time. And the other, the big social media platforms don't seem to care. So you need to care like I can. So Trader Cobb, Craig Cobb, the Grow Me Co, they're the best places to get me to really understand what I do. Oh yeah, I've got a YouTube page too that I just started a couple of weeks back. Again, it's just the Grow Me Co. So you'll get to see how I analyze the market. You'll get to see some educational snippets in there. Yeah, if you want to see, get an understanding for how I operate in the market, those places are going to make it pretty apparent what I do, and you're probably going to realize, oh my God, he just says the same shit over and over and over again. Well, yeah, that's what trading is.
Yeah, unfortunately, repetition.
It's getting good
You
at
know,
being a robot.
yeah. Well, until the robots take over, of course.
Yeah, and then hopefully I'm out. I know I'm
I'm out,
retired
mate.
by
I'm
then.
gone. Yeah, exactly, mate. Exactly. No, that's been great. You know, it's really enjoyed that. You know, you speak a lot of sense, and you know, you can definitely feel that vibe that someone that's kind of been through it, and unfortunately, you can put on the showman stuff, and that's one side of it. You know, you could be the big personality, but unfortunately, it just comes down to, as you say, doing the same things, the checklists, and I mean, what's been your biggest kind of problem then? With crypto, is it scaling up, or what's the kind of, if you could kind of go back 10 years, what would you change? I mean, what's been the hardest kind of part of your journey so far, would you say?
Oh, by far, trusting an exchange that I had a business relationship with that I knew on a pretty personal level, and trusting them with a large amount of money, and watching that all go away, was the hardest part. So essentially, just being ripped off by an exchange. What have I learned from that? So that's something that people need to understand is that, let's be real. We have margin trading accounts. That's how I trade. So if I want to be risking $2,000 on a trade, let's say, I don't need to have 200, so I risk 1% per trade. If I don't need to have 200,000 US dollars sitting on the platform, I probably have 30 and I can have multiple positions open because I'm using margin. Now I don't mind paying a little bit more to get a little bit more margin on my fees. If I'm trading a weekly chart and I might be in it for 4 or 5 months, then I'm going to either take it spot or I'm going to back the leverage off so that my rollover fees aren't quite so high. Or I'll trade a futures contract if there's enough liquidity, so I only get like 2 or 3 rollovers, right? Um, but I think the biggest lesson was, yeah, just you can't trust counterparty risk. Counterparty risk is the one. But I will also caveat that. I will caveat that by also saying to you this. I can't remember what year it was, 2000 and might have been 2012. Do you remember the euro and Swiss franc were pegged at like 1.2, I think it was, for so many years? Well, I had a trade that every time I came back down within like 10 ticks at that level, I had a long with like a 10, it was only a 10-point stop because it would always bounce back up. That's what it did because they had whether they actually the central bank of Switzerland was doing anything, or I think it was brilliant. I think they just said it and let the market dynamic do it. But I was taking that trade. I made a lot of money off of that trade. You get like I think I had 3 or 4 trades. There weren't a lot of them, but when they happened, they were almost surefire ways of making money until they took the peg out. And when they took the peg out, I lost my $250,000 trading account at that time back in I think it was 2012. Because I remember I was back in Sydney. I'd left London. And I also owed my broker $880,000 on top. Essentially, and I just had a baby. It wiped me out. Talk about stress. Thankfully, it was their market maker or liquidity provider. It was with CNC Markets. They wound the trade back because it was an issue on their side or through the liquidity provider. And not only did I get all my money back, but I made about $4,500 on the interest rate differential. for the period of time it took them to roll it back. So I made money on that. But I can tell you right now, that was the hardest week of my trading career. And that was in foreign exchange. So what I'm getting at is what happened in foreign exchange so what happened in crypto also happened to me in foreign exchange. It took a lot longer for the money to come back from FTX. I still haven't got my money back from FTX because it's a larger balance, takes longer to get apparently, but it's getting paid out. I got one part of it back and I got interest on that as well. It's just taken, I think, 3 years for that so far, whereas the other one was a little bit quicker. My point being is that don't look at crypto as a scary beast that you can't tame. You just need to once again understand how to operate within those four walls. The upside potential to grow a small account and a big one is far greater in crypto, but you do need to take some precautions as you do with any market that you're going to trade. So yeah, counterparty risk is the big lesson for crypto. Anything else, I mean, it's just another market, man.
I get you, man. I mean, that's sound advice, and real life experience. I mean, I guess that's probably a good point to wrap it up, Craig. Everyone knows how to get in contact with you. We could probably talk for hours, but I see you got a bit of a sniffle. Maybe when you're better, I'll pop over. We'll have a beer in Australia. But yeah, no, it's been great to talk to you today. So thanks for that. So I'm just going to wrap up now and say thank you to Craig. And if you like the interview, please subscribe and like on YouTube. And we're going to send all the links out to you for Craig so you can talk to him. But it's been a pleasure. Okay, thanks for that, mate. We'll
Thanks,
speak
Steve.
soon. No problem.
Cheers, big man. Cheers.